China reports its slowest growth rate for nearly 3 decades.
Battles a trade war with America.
What does it mean for the rest of the world?
China has been the economic miracle of recent decades, but is it running out of steam? And why does this matter for the rest of us? Let's just rewind. China's economy is 42 times larger than it was in 1980. The country relied on cheap, plentiful labour to become the largest manufacturer and exporter of goods on the planet, accounting for a fifth of global trade. But growth has shifted down a gear. The official figures say the economy is growing by about 6.6%, but independent economists think it may be closer to 5% or even lower. Whatever the true figure, 2018 was China's weakest year since 1990. But why? Well, as the country flourished, so too did the wages of its workers. So it lost its competitive edge to the likes of Vietnam, the Philippines and Bangladesh. To counter its reliance on exports, China is now focusing on its home market, which means part of the slowdown is intentional. Another reason is the size of China's debt. Borrowing by the government, companies and consumers now totals almost 3 times the size of the country's annual income. The measures imposed by the government to curb lending have hit spending and investment, feeding into the slowdown. All of this has led to plenty of red lights flashing when it comes to the country's economic health. So what does the slowdown look like inside China? Let's start with manufacturing. Activity in that crucial sector, which makes up 2/5 of the economy, contracted for the first time in 2 years in December. Then there's raw material prices. As the world's factory, China dictates the price of many industrial metals and other commodities. Some of those prices are falling as demand wanes. Households are feeling the squeeze. Their spending is going up by less. Retail sales are expanding at their slowest rate in 15 years. Even car sales are falling for the first time in 2 decades. And although such numbers should always be treated with caution, investors are worried. Shanghai's stock market lost a quarter of its value in 2018. And let's not forget the trade war with the US, which triggered tariffs on both sides. While its impact so far has been limited, the threat of escalation remains a serious risk, not just to Chinese, but world trade growth. And this is the crucial point. Any slowdown in China's economy will have repercussions for countries across the world if Chinese consumers and companies are not buying as much as previously hoped. So, all doom and gloom? Well, China's time in the sun, its superhuman growth spurt may be over. By 2030, economists say growth will have settled down to about 1/3 of its current value. But even that would be enough to ensure it overtakes the US to take pole position as the world's largest economy.